Okay, good morning, everyone. Uh, I actually promised to make a video on supply and demand, but it's a new week and it's a trading week, and everybody is trying to make ends meet. So, and I'm not exempted. So, supply and demand. Okay, first of all, this video will be in two parts or three parts. I'll have to, do the textbook version before we go on live chat. No. So I think supply and demand zones. There are zones where big the hedge funds, big banks, make their moves. You understand? The simple definition from my own view would be supply. There are areas where you tend to sell from, while demands the area where you tend to you want to buy from, where you feel okay, I want to buy this particular commodity in this zone, you know um and and this will correlate into when unlike the support and resistance zone. There are zones where you tend to predict the past price action, while this supply and demand is like for the freshest zone, the fresh zone that the price just move from. You understand? So um I think okay, we'll start with the textbook. I'm just waking up, so you have to bear with me. So let's see. Okay, supply and demand zone will be into four categories or four different parts. Let's see. We have this move, which is rally. Then we'll have this move, moment of consolidation. Then we have another move up. Now I will call the if I want to name this, I will come here and I will say rally. Here will be base rally. Then the other one will be, this is for the bullish move. Then the bearish move will be drop, a moment of consolidation, drop. So this will be drop, base, drop. So this is a minute. Okay, this is for the bullish price action, or the bullish momentum, and the bearish momentum or trend, whatever you want to call it. Then let's see the reversal. Let's say price is on a bullish move. This is a bullish move. Then we have a moment of consolidation like this. Then price decided to return back. We call this rally base drop. I will explain each and every part. Maybe we will digest more. Then I'll try to move the charts together. Then the fourth one will be drop moment of consolidation like this. Reversal. So let's name them. This will be drop. Base. Let me just write this thing to make base rally. So you see in this, let's start with this bullish run. In a bullish run, we'll see a bullish run like this on the chart. There comes a moment of consolidation or the waiting time like this. Then you see price will go again. Now in supply and demand, this moment, this consolidation zone now is the demand zone now. What you will see price will do is you see price will return back to this base like this. Then you now place your buy order around this zone. Then you set your stop loss below this zone, below this base. You see what price will do now. The next thing price will buy. We can target this high as your take profits. You can target the high here as your take profits. Now, but in support and resistance, in cases like this, we will be looking for the left hand side where past price action, where price have is it change will I say change character or where price rejected zones, let's say rejected zones rather, that's the best word to use, rejected zones. Now if we are to use the liquidity trading concept, you now see when price come back to this zone, we'll now be looking for POIs. We'll try to see the POI that the market will respect. Then we'll now pick a particular POI to trade from. So that's a typical example of the bullish run. Now let's go back to, if we are to go back to the bearish run, we will see price drop down to the base. In moment of consolidation, we will mark the zone. You now see price return back to this zone like this. Then immediately price come down to this zone, we will sell. You see price, we can target this low here, or we'll target new low. You see price will drop. Just like I said with the demand and demand zone or the bullish run. You see, if it's liquidity trading concept or SMC, whatever you call it, when price get to this zone, you now pick a particular POI. That means we now look for inducement. We now look for the where all liquidity sweep. You get. So that's it. That's the typical example of trading from this base here will now be your supply zone. This base here will now be your supply zone where you want to sell from, where all the whole money market is. Then another thing again is, let's take for example, if price is doing, let's say, supply and demand. If we have one, let's say, we have let's say 1,000 demands, yeah, and 500 supplies. If price is going like this, the 500 supplies, they are much. You see price will get to this place. Since the demand is small, you see price will go up. That's another example. Then another example is when the demand is more than the supply, price will be bullish. Typical example is when we have more demand for fuel in our petrol station during scarcity, because people keep coming, people are buying, the demand for the product is high. You see most of the they will keep increasing the prices up. But when the demand is not there, you see the filling station will be scanty, price will drop drastically. That's the typical example of supply and demand, guys. Now, in this typical rally based drop, is a reversal model where a bullish run will come to an end on this base. You look for a candle, seek confirmation, or you select your POI, or you just place your order. Then what we will see here is price has been on a bullish run. In moment of consolidation, then price will drop. Sometimes you see price will do like this. When price is trying to drop, it may be something like this. Then you see price will do something like this, come back to the base, drop. Then that's a typical bullish reversal model, where this one is opposite of this one. So in cases like this, unlike the support and resistance, where you see double bottom, double top, head and shoulder, and the rest, those are the typical example of reversal model in support and resistance. Why the bullish and bearish, demand and supply, you see in resistance and support model, you see a point whereby in the past hedge funds tend to place their orders where price actually move from. But in this scenario, supply and demand is the freshest zone. Like you see this consolidation and price, move, came back, boom, it will buy to the upside. So these are the typical example of supply and demand. So I will send this video, then I'll make let me make um I'll go to the textbook, to the chart, to the live chart, to give so I will see few examples of this model. So because I can't exceed 20 minutes time frame on the trading view, I'll have to end the video here. Then I will continue the next video from the live chat. Thank you guys.